Hey, what's up? This is Andrew, and we're going to look at how I do my music business accounting inside of Wave as well as my personal accounting. This is a free software. You can get it here at this waveapps.com, and I highly recommend it. This really just, I want to just say, I really struggled financially for a very long time until I started using this software, and it basically put me in a position to actually see what's happening with my money and manage my money, like, in minute detail that really encouraged me and gave me the energy and allowed me to put forth the effort to grow my financial standing over time and make better decisions in my business and in my personal finance. So this thing really changed my life, changed the way I handle money, and I know that it's one of the most powerful tools out there that's really underutilized. It's basically like QuickBooks, like with a few less features, but it's free. Like QuickBooks is super expensive. This is 100% free unless you're using it for like invoicing, and I'll show you that stuff because that's pretty cool, and they just take a percentage if you do that. But like, just recording your transactions and stuff is totally free in here. Linking your bank accounts, it's all free. So first step, this is the first page. So just put in my name, my business name. I'm just calling it my music company. And basically, this is for the purpose of separating really what you're doing personally from what you're doing in your business. And you really should see your music as a business. So like when you're filing taxes, if you're a sole proprietor, you should be filling out a Section C for the money that you make from your music, or you should be starting another business type like an LLC or a corporation, in which case you should get an accountant or a lawyer to help you out, figure out like the exact situation in your state. In my state, Florida, I know it's really simple to just go online and register one of those, like just like that. But I do recommend doing that if you can afford it. It can come with like fees and stuff that you need to be aware of, and like reporting needs, and it's especially important to be doing this type of accounting if you do have a business like that, because they will be asking for your financial reports every year. So super important. What does your business do? Art, photography, and creative services was the closest. So what do I want to do in Wave? Let's start with managing accounting. How do you currently manage your accounting? We'll say I haven't started yet. Just for the sake of the example, do you currently work with a bookkeeper or accountant? No, but I'm interested in finding one. That's a good thing, especially when more money starts to come in. Like if you need help with it, it can be very useful. And there's accountants that are like pretty reasonably priced if you go to something like H&R Block. Do you run payroll? Um, uh, yes, you will be running payroll. Um, Probably just contractors. If you start like having employees and stuff, then you're well beyond the scope of this training. But like contractors, you want to be able to handle invoicing and payments and stuff. What type of business do you have? We'll call it a sole proprietorship. And again, you could get an LLC or a corporation, and those are pretty solid options as well. Like especially for the tax structure, like with a sole proprietorship on the Section C, like it basically ends up taxing me the way that it would, like just based on my total income, and it really doesn't separate a business as much as an LLC would, where like an LLC is going to be taxed at the federal business tax rate, which as of this recording is 21%, or as well as whatever your state income tax is, and for businesses or state business tax. In Florida, we don't have that, but some states do. So I definitely recommend these, like going down the road. But if you're just starting out, this is how I started out, and it really got me to take my business very seriously, even starting with just a sole proprietorship. And spin and wheel. All right, so this is cool. You can import your data directly from the bank, and it's a good idea to link your bank accounts directly into this. I actually tend to do a lot of it manually. I just find that like really the process of actually putting everything in here and just taking time a couple times per week. Again, the software for like maybe 20 minutes twice a week, and just make sure that I've really accurately managed everything that I'm doing. So while you can import it automatically, I do kind of recommend doing it uh, by hand. That way you can make sure every transaction gets in there the way that you want it to. Like this is not necessarily going to be the best option, but it could be helpful. You can scan receipts. I don't really scan receipts. You could save them in a drawer. I figure recording the transaction, having a record of it on my history is generally good enough. But like, if you make a big purchase, it's definitely worth saving the receipt. Or if you want to save receipts in general, you could do it. I just personally don't like big boxes of receipts, or you could scan receipts, right? So any of those work really. And yeah, that's all we really need to look at there. So what I want to look at here is this accounting tab. So we're going to start here at the chart of accounts. This is the money that we have. So like there's a lot to look at here, right? So this is our assets, the majority of the action here. And let's actually start from the personal accounting, right? So just a quick kind of rundown on the personal finance side of this. So accounting, chart of accounts, and this is going to be simpler here too. So cash in bank, so you could put all your bank accounts in here. So this is cash on hand. This is like the amount of cash you have. I actually like to split this up a bit, right? So like you could have discretionary cash, and that's like just like cash that isn't really budgeted towards anything. Oh, this one can't be changed. So we can just call that cash on hand then, I guess. And that's essentially your discretionary cash. Then, like I honestly really improved my financial situation a lot with envelopes. So like, I would like have something here called like savings cash, and that's basically an envelope that I won't remove money from. This is really good. Like I was blacklisted from banks for a long time. And that's one reason I got really good at this stuff is because like, I really had to dig myself out of a pretty bad banking hole, and have like using that kind of system where you basically have money that's set aside for a specific purpose that you just don't touch in a separate location that's hidden. Like don't tell anybody where it is, don't say anything about it really, and you're solid. And eventually you'll want to move that into a bank, of course. Like having money in a digital wallet is way better than having it in a physical wallet in most cases. I mean, you really want to diversify. And so honestly, like the more accounts you can have in here, the better. So like cash on hand, savings cash, you could have like cash for other things. Like, I have one for like for other stuff like investments. You could have investment accounts, but then like you really want to look at your banks, right? So like you might have a Capital One account, Capital One checking. You want to make sure that you're separating between your checkings and savings. So Capital One checking, Capital One savings, and like you'll see like there's really a lot that you can put in here. If you're like one of the things that was really helpful for me digging myself out of that banking hole is Chime. It's not like as fully featured as a bank, but or as like a in branch bank, but it is helpful. So like that sort of stuff. What really helped me the most was PayPal. Like PayPal is actually just a super powerful machine basically to create financial transactions between almost anything. Like it kind of gets this rap as like a payment processor, but like I mean, it really does a whole lot. That's not PayPal checkings. It's just PayPal, and I would identify this as PayPal Personal because we're definitely going to be talking about business PayPal here shortly. So PayPal Personal, and like all this stuff. You might also have like an investment account. Like you might have a Acorns, which actually posts a dollar value, so you can report losses and gains and here like to your Acorns account and basically just post that whenever it updates. Or you might have something like a Charles Schwab, which is going to be more complex to account, but Charles Schwab is super professional and they will definitely help you on the accounting side of that. So, like you can see, like this is like about what I've got going on in my thing. I have a couple other things in here, like and like some of these aren't exactly the same, but this is basically the sort of general ideas. Like you have all these different accounts here. These are all the accounts that you have money in, and you basically want to track exactly how much money is in all of these at one time. Other things to look at here, you could have like accounts receivable is good to have. Like if I do work for a client, and I usually do this actually on the business end, but and like if I'm waiting on payment, I put that in accounts receivable. One, it like shows me like the money I have to work with, which is like accrual accounting. If you've heard that term, it's not really like super important, but accrual accounting is basically just the accounting when you include accounts receivable and accounts payable. So it like shows like money that's expected and lost, or like profits that are expected or gains and like money that goes out. that is expected to occur and like is supposed to occur. But like, an account receivable is definitely not the same as actually having money in an account, because your client could always like not pay. And I've had that happen a handful of times, and it's not fun. And so it's just a good thing to be aware of. You can track inventory in here. That's pretty cool. Your equipment. This is all business stuff down here. You could have your assets here. You could actually like set up your investment accounts here. But we're not really going to dive too deep into investments. If you're getting into investments, you have to do a lot more homework than this video, to be honest. And then we can, like your income accounts, income and bonuses. That's really the only one you need. I think I have like gifts in here is a good one for kind of stuff that like isn't necessarily income and you want to separate from it for tax purposes. It's good to have gifts in there. Income and bonuses, and then like you could have like returns on investments as well. But again, we're not going to focus on that too much here. There's really a lot of different ways you can account for that, and it's important to make sure that you're doing it the right way. And that's kind of outside of the scope of this video. And then like all these expenses here, they have a pretty solid list. I add in stuff that's like actually related to my business. Like one thing I've done before to really kind of save myself a lot of frustration of like if I have to pay for a business expense off my card, is like I'll have one called my music business that allows me to account for it really quickly. And then like when I'm actually going more in depth on the accounting and have more time, I can basically like sort those properly and make sure that the business, like as a single person business owner, that it's balanced properly. And we'll talk about what it actually means to have the accounts balanced in a little bit. So yep, equity, this is good for like basically this is kind of the more complex, a bit more finicky way, but the actually proper way to do like my music business. You really want to view it as an equity account, and if you do use this trick, you should basically be going back and moving into the equity account. I'm getting a little bit ahead of myself. We want to look at transactions here, right? In this reconciliation tab, this is good, like, to make sure that these are actually the amounts posted in each of these accounts. So like, if your PayPal, like if you go to your PayPal dashboard and it says you have like $105, but this says $103, you need to figure out where the discrepancy is. Like that's actually, it seems small, but it is super important, and you want to make sure that's like 100% accurate as much as possible. And that's basically what I'm coming in here to do each week. Like my general upkeep that I just do for like 20 minutes twice a week or so is basically to go through each of these accounts and make sure that these match the actual values. And they have like this tool, but again, I really prefer to do it by hand. And that's just me personally. So, like, you can connect your bank here. They recommend it. I like to do it manually. So, basically this is the transactions. This is where the majority of the action happens. And also you don't really have to go to this reconciliation tab. Like I pretty much never go to that reconciliation tab. I just click here and it shows the amount of money that my accounting says, and I just make sure this matches what's actually in all these accounts, right? So like let's say that I am starting today, I've managed to save $500 in cash, and this is just where I'm starting. You probably want to go through and get like as accurate of a snapshot into the past as possible, but it can be difficult starting out from scratch. Like with your banking, that might be a good reason to like upload the CSV, and connect your bank, upload whatever, upload the actual banking transactions. Since, I started this like coming like way out of the deep pit, I really ended up basically working with cash until I could even open bank accounts and just with like PayPal and stuff. So all that stuff was really starting from zero when I started. But you might not be starting from zero. So, try to get as accurate of a snapshot as possible. Definitely make sure that all these, like the day that you start, match what's actually in your accounts, and like all these are going to be whatever places you have money saved in, right? So, like for example, let's say that today we were starting out with $500. We'll just call this cash on hand. Like, it doesn't need to be super clear, especially when it's like a relatively small amount of money and like you're just starting out. You can kind of get away with it more. You really want to report as accurately as possible. Like we could call this like cash saved over 3 months or something, right? Like, that might be your way of starting. And like yeah, so that goes into your cash on hand, right? And we'll call that income and bonuses. Like you probably worked to get that money, right? Or like we could call this like cash from studio clients, right? Like, just something that's really descriptive. So, like you want to make sure that that is in reported accurately here. So like, you have $500 listed here. Well, do you have like $500 on hand? Do you have $500 in cash right there? Then and there. And then you might have an expense here, right? So like you go out and spend $18.77 at Chick-fil-A. That's a lot of money to spend at Chick-fil-A, but it is pretty expensive fast food. And you'll put that in here. I think there's one for restaurants. Yep, restaurants, coffee, and bars. And also you want to make sure that this date is always accurate. Like maybe you did that yesterday, but we'll say you did it today. And make sure it comes out of the right account. And I'll show you a trick for that in just a second. So like, if I'm trying to like reconcile my PayPal, for example, I'll come like straight here to PayPal, because now when I hit this button, I'm not going to have to worry about this. Is like one of the most common accounting errors to make, is to like put it in the wrong account. But if you're like doing the accounting just for one account at a time, it's going to fix all the transactions to that one account. But let's go back to all accounts here so we can see cash. And we were doing PayPal here. So like, let's say you like had like $200 in PayPal. PayPal balance. That's like a bank. It's not going to be a fixed balance like $200, but 207.77. That's your balance today. Like really what you should do is go back and like find all the transactions since the start of your PayPal account. And again, like there's the connect your bank tools in here. You could download a CSV of all your transactions and upload them in here. Like that's like the real way to do that. And I would recommend doing that. And then like probably managing it manually after that. I really think it is best to manage it manually. But if you do connect your bank, just like really the word of caution is just to make sure, because it will save you time, but like you need to make sure that you actually still make the time to come in here once or twice a week and ensure that everything is accurate. Like do your reconciliation, make sure that everything is categorized properly. And I'll show you why the categories are so important. Like this isn't just a matter of having that, right? Like there's a reason that these are all here. So now we have this money in the account. Okay, you just bought FL Studio Fruity Edition for $100. And this is kind of up to your discretion. You could account for it like as a business expense, in which case really the best way to do that would be through the music company. In fact, let's actually do something that's not music related. You just bought yourself 10 bags of coffee, because musicians need caffeine from Amazon, right? Like you just write like a basic description like that, and it's helpful to be like pretty specific, so like it makes it easier to track. And that was $99.79, and that came out of your PayPal account. You want to make sure that account comes out of the right account. So now we have all this money in this account, right? Oh, choose a category. That would be groceries. And you kind of just figure out how to do this over time. It's kind of taking a little longer because I'm just trying to like make up transactions here so we have a bit to work with. Like what other accounts here are really important? Like I mean, honestly, this probably gives us like enough to at least see what the reports are. And that's really what we're looking at here. So like this balance sheet, this is a good one. These are like your three basic reports here, right? So this is like any sort of government interaction you're going to have. Like these are things that investors would want to see, especially on the business end. But these are like your kind of three core reports here: profit and loss, the P&L, or income statement it's referred to sometimes, the balance sheet, and the cash flow statement. So those are important. And then like they also have other stuff in here too. And I think there's even more on the business one for like just kind of other reports. But all this is automatically updated. Like this stuff, if you're doing this in Excel, it is like the biggest headache ever, and Wave Accounting eliminates this right there. Like it just does it for you as long as you record these transactions right. So like because we went in here, we showed the category, we showed the accounts like PayPal personal, PayPal personal, cash on hand. It's going to update all this accurately because the transactions were accurate, and you don't have to worry about like any of the headache of trying to do that in Excel, which is really incredible. So profit and loss here. So this is our P&L statement, right? This is from the period of July 1st to December 12th, 2020. And you can put in any date range here. You might want to do like the quarter, for example, right? So like we could grab the quarter. So we're going to go through here. I'm not like, I always have to Google this stuff whenever I'm doing my quarterly accounting, but June, July, August, September, October, November, December would be it, right? So October 1st to December 31st, I believe, is the fourth quarter. So, now we can update it and like get our quarterly accounting, or like, annual accounting. We could go all the way back to the beginning of the year. It's not going to change because we don't have enough data in here, but like all this would be automatically updating. So like now we can get a snapshot of the profit and loss for the whole year. That's basically just how that feature works, and it does have like the very practical advantage of getting those really key snapshot reports like quarters, months, years, or like all of history, up to date. And then you can get the two different reports, well actually like four different reports here, right? So we can get the summary, which is just going to show like basically your income, your operating expenses. It like shows it like a business, because this is really like a way a business would account. Like, people, I've never met a person who's not in the business world who doesn't do business accounting who accounts like this. But it is useful as a person. Like, now that we're looking at the detailed view, we can see like what we actually spent the money on, which is going to give you like accounting always tells a story. That's something a close friend of mine told me is, accounting always tells a story. And like, if there's an issue in the accounting, like, looking at like these details might show you like, oh, I just spent $400 at restaurants, and if I hadn't spent that $400, I'd have $589 instead of $400, or instead of $189, right? Or $89, whatever. Like, you see really where the big bottlenecks are, like the big obstacles in your finances, by looking at the details. And as you upload more transactions, like this kind of gets more complex and more full, but you get the basic picture here. So that's the P&L is basically showing like the outgoing money versus the incoming money. Like, did you make money in that period? Did you lose money? Like, if you had spent more money than you made and you were in debt, suddenly this would be a net loss instead of a net profit. It also shows you this is pretty cool. It's like, what percentage of money actually like stayed in the business instead of going out, or stayed in your personal accounts. Like, this is your personal accounts, but this is like treating you as a business. And in the music industry, more than most industries, like, you are a business. So it is good to account for even your own personal lifestyle as a business. And this is really like, I know it's not for everyone, and if this is like all kind of overwhelming, I would recommend just finding a great accountant that you can partner with, because like this is really the most important thing you can do for your financial future. And if you can't do this, like, find somebody trustworthy and reputable who can. Also, just to mention this again, you can do cash accounting versus accrual accounting. So cash, like, this is paid. This is like money that is actually posted in the accounts, versus paid and unpaid, which is money that's posted in the accounts as well as money that you owe to other people and money that other people owe to you. So that like is including debts, basically, is accrual accounting. And that's how most people account. It's really awesome that there's just a button you can hit. Like, I remember trying to do this stuff in Excel, and I was just sitting there like scratching my head, like trying to figure out, do I do cash accounting or do I do accrual accounting? Which one do I do? And it's like, in Wave accounting, same thing in QuickBooks. It's like literally a button that is like just makes you want to punch a hole in the wall if you're trying to do it in Excel. So another big reason is this like really simplifies accounting more than anything else I've ever seen. The balance sheet, this is going to show how much money is in each account. So this is like basically reconciliation, but on a much more kind of molecular, helpful scale. And it also, this is going to be really important when we get to the business, because this is actually going to show like how much equity you have in the business, right? So assets, that like you see, we have like three main columns here, and I think if we export this as a PDF, it might like look kind of more. No, it doesn't quite do it, but yeah, the kind of, this isn't like necessarily the traditional layout of a balance sheet, but it does show the same information. Basically, the really important equation to know with a balance sheet is that assets equals liabilities plus equity. So, and this is really important when we're going to look at the business accounting, which like we're actually covering a lot of it right here, talking about personal accounting. So yeah, that'll actually like fly by pretty quick. But the assets, this is like all the money that the business or you have. We could look at the detailed view here. So, like this is going to show like, you have these cash assets of cash on hand and PayPal personal, and that's like the total amount of assets. Any like other assets like real estate or investments, anything like that, all that equals $589.21. Liabilities, these are things like debt. These are like just the things that you don't want to have. These are like bills to pay. These are money that you owe. This is like unpaid commitments that you have. So you want to avoid liabilities. And the really practical thing, and something that like the balance sheet shows, because like I think this really shows the big benefit of not getting into debt more than just like, because debt can be like something that piles up really easily. You can basically be spending money and thinking like, well, the credit card is letting me spend the money, so that must mean it's okay. And like, I know I'm racking up debt. I know I'm taking out loans. I know I'm taking out student loans, but it's okay because it's like money. I'm getting the money, even though it's debt. But eventually that like runs out. But it also affects you immediately. Like I think it's easy to look at debt as like something that really affects you far off in the future, but it immediately affects your equity, right? So like even though you might have assets, like you just got sent a check from the loan that you took out, like and that seems like an asset, it's really actually like not, because it's basically counterbalanced against your equity. So equity is basically at like you could like flip that equation around too, right? So like equity is assets minus liabilities, and assets are liabilities plus equity, right? So you want to avoid having liabilities, because this increases equity, which is like your ownership, your stake in the company. And since we're looking at this on like a personal accounting level, on a personal accounting level, like this is really like your financial stake in your own life. So you want to have equity, you want to avoid liabilities, because that's going to raise your like actual financial equity as a person in society, which is really important, especially in like a heavily self-employment directed industry like the music industry. You really want to be careful to keep your liabilities down, because like it might seem like you're posting more money in the accounts, but if you're like racking up debt, then it's just going to crush your equity, and your assets are like really an illusion in that case. So equity is really like an even more accurate snapshot than the actual money in your account at any given time. And the last one we need to look at here is cash flow, and this is basically an in-depth look at where the money goes. Let's take the detailed view here. So, this is showing like, all right, so this is where all the operating activities happened. So, and again, this is like really treating it like a business, even though we're looking at personal accounting. So, we have sales and purchases, and like, but all this is under the umbrella of operating activities. So you can see that like, there's a net result from all the operating activities. Then you have like investing activities, which would be like, buying music gear would definitely fit here. Um, Financing, that's kind of the same thing basically. And ultimately you're going to end up with the most up-to-date total balance. And this will basically show the same number as the balance sheet, unless you have some like really crazy, weird investing, financing activities. Like I said, like a lot of that stuff is outside of the scope of this. Like if you're really diving deep into investing, you should get a professional to help you with that. But basically, just understand this is like going to show the same information in a different way. It's showing that these were posted on the balance sheet and on the P&L form, but it was just kind of ordered differently. And this is showing where all the money is being spent in these different things, or where the money is being gained, where the money is being lost, but it basically breaks it up into operating, investing, and financing. And that is personal accounting in a nutshell. So let's take a look at my music company. We'll say this is a sole proprietorship, right? You can make it an LLC or anything else like that. You know, oh, and I forgot to show this actually. Let's look at this on the personal accounting. This dashboard is super helpful, right? This dashboard gives an awesome snapshot, and for me, it really heavily impacts my decisions. I mean, this is an incredible picture here. That's you're making tons of money and you're spending almost nothing, but often there's a lot more kind of give and take here, but the goal is to essentially keep it moving up. If you can drive your cash flow higher, if you can spend less while making more money, that's going to ultimately result in a higher balance, right? But this is basically just going to show how you're spending your money and encourage you to spend more effectively and make investing activities. That's a lot of money on restaurants, coffee and bars, right? Or a lot of money on groceries, or a lot of money on Netflix subscriptions. You see that stuff really broken down here on the dashboard, and that is helpful for making good purchasing decisions. And setting aside money. I mean, really the goal here is the meta goal is to be increasing wealth. So if you can be setting aside money into those savings accounts, the more that you can do that, the better. And the more that you can be investing, the more that your purchases can be about leveraging your financial situation to make it even better. That is really the goal with all of this. So here we are again. We're going to go in here, chart of accounts. One account that I think everyone should get, because you can get this as a sole proprietor. It's hard to get a business account as a sole proprietor. To get in Florida, to get a sole proprietor bank account, you have to get a DBA, which is a really crazy process where you have to post an advertisement in a newspaper, so that shows that you're the owner of this company that is doing business as something else. It's a really convoluted process. It takes a lot of time. It costs a bit of money. But the banks want you to have a certificate of being a DBA to open a business account, or you can get an LLC. An LLC is really the faster option. It costs a little bit more money in Florida. But one thing everyone can do is open a PayPal business account. And this is one of the best things that you can have in your business. You can also have cash on hand, right? You can have cash that you have set aside for specifically business purposes, and you want to, and basically when you put that money in here, if you're the one putting money into the business, that raises your equity in the company. That same table we had over on the personal page we also have here. So that's basically how you move money between the two in the most efficient way possible. Sometimes in the spur of the moment you have to make a buying decision on a personal account for the business, and then you're basically left with a headache of accounting for it. But it's manageable, and as your business grows, you'll find that you actually have a lot more options to pay for stuff than just PayPal Business. One thing with a PayPal Business, they won't send you a debit card, but they will send you a debit card. What's really cool about this is they will send you a debit card for your business. You get a business card after getting $250 in that account. I remember it was kind of annoying because I was at the wrong address when they sent it out. They just sent it out automatically. They're your business card is on the way, and I was oh, I'm not even at that address. But I managed to get the people at that address to send it over to me here, where I received that card, and it was helpful, right? So that's it basically lets me make those kind of buying decisions on the spot from the business, and that is very, very useful for simplifying the accounting and saving me a lot of money at tax time. So transactions, you can do all the same stuff here. We're not going to do all that again. I wanted to see if we had any other reports here. Yeah, see, there's all sorts of reports here that you can really get into here. It can track sales tax, in Florida. There's a whole crazy sales tax bracket. Thankfully, a lot of my goods aren't taxed like that, but it is something to be aware of. Like you have to get like tax licenses and stuff. Honestly, like there's like really quite a bit of leverage on that. Like the thing is, like if you are collecting stuff that requires you to pay sales tax, like make sure you're paying it. Be aware of it. Know that you have like maybe like a couple $1,000s of breathing room, but like you do actually need to pay those taxes. Payroll, wage, and tax report, all that stuff. You can break down your accounting based on specific customers, and we'll talk about that, based on vendor. So all sorts of awesome stuff that you can do in here. But we want to look at sales here, right? So you can prepare estimates for your customers. You can create an estimate. Usually invoicing. I usually don't create estimates, right? Like I go straight to the invoice. But I could send an estimate to a customer, and basically just like list out like, all right, I estimate that I'll mix your 10-track album um, for $1,000, right? And that is, and you could add a product there, right? Um, add a new product. And this is the same thing that you would do, right? Like mixing, for example, like we could even say I have a flat rate here of $100, and sales, add product, and now we add a quantity of 10 and get the same result there, right? So like we're doing uh, mixing, and like we could like put in a qualification, like 2 revisions. Um, and this is basically what you send to a prospective client who's asking about your rates. It's going to look a lot more professional. It's going to give you a more clear, um, basically snapshot of the services that you're offering, and often can be very effective. Honestly, like in this industry, there's not as much need for estimates and invoicing. The invoicing process is very similar. You can brand it, like you can put your logo on the invoices. It's pretty cool. You can also, see, like, it's like basically the same thing. You go in and enter in the products, but like this time you're actually requesting payment. It can also process the credit cards in here. They charge a small fee for it, but you could like, send them the invoice electronically through Wave and have them pay you directly on Wave. That is an option. I don't do that personally. I'll sometimes like print an invoice on here if I'm working for kind of a more corporate client. I do send them a Wave invoice, but usually, it's kind of more casual transactions in the music industry, and in that case, you just want to make sure that you're accounting for it here under your transactions. So like, sometimes this could like send the wrong impression, right? Having like a professional invoice like that. Sometimes it's the impression you need though. So just be aware that that is an option, something really useful. You can track inventory in here. You can like keep your customers in here. I think it's really like not as good as having a real CRM, something like HubSpot or MailChimp or Actionetics are all like good tools for that sort of thing. There's a bunch out there like Infusionsoft. You can do that, but honestly, like for a free tool, like all the things I just mentioned cost quite a bit of money. So for a free tool, this is not bad, and it is especially good if you're running like something more like graphic design, or you're like invoicing, like venues, right? Like this is a great thing for venues, is to invoice this way. If you're invoicing a label, right? But you have to be careful with that stuff too. Like don't send an invoice unless like you're sure what you're doing. Because if you send an invoice to somebody who's not supposed to get an invoice, like that's like definitely bad looks. Products, I think you can track inventory. I'm pretty sure there's somewhere you can track inventory in here. But yeah, anyways, there's a ton that you can do here. You can like spend a bunch of time digging through all these tools, but we covered most of the important ones, right? And really, just again, like just to talk about basically what this is all about. This helped me a ton when it really came to getting my financial life in order, because I never really took the time to, and like didn't I assumed like it was just something that would just happen, and I really never gave myself an accurate snapshot or like put in any sort of accountability, right? Like accounting creates accountability. It makes you accountable for your financial decisions, and it helps you make the right financial decisions, right? Like it's really, I'm not a very analytical person. Like, and I know that seems like kind of crazy because I just talked about accounting for however long it's been, but I'm really not like a super analytical person. Just like I mean, I'm like fairly analytical. Like I'm not like totally like um, unable to look at numbers and stuff, but it's just like something that like has never really interested me. Like math class was generally my worst class growing up, and I just kind of relied more on like influence or like the ability to generate wealth on like windfalls, but like that stuff really isn't effective compared to actually accounting and having accountability for what I'm doing and being able to actually watch the numbers grow, right? Because like one thing is like when you start to have money and like let's like go back to personal here, you have money in 10 different accounts, like you don't really have in your mind a snapshot of your wealth like you do when you go to your balance sheet and you actually see like what your financial situation is, right? Like you kind of need to account to actually see what's happening. Like just kind of feeling it out doesn't really work. And I'm really more of like a relational person. So like it goes against my nature a bit, but like when it comes to money, like really actually doing it objectively and making the decisions like maybe I shouldn't have spent 1877 at Chick-fil-A. Maybe I could have bought one bag of coffee this time, or maybe buying a bulk was the right decision. Maybe that was a good decision, but maybe like 5 of those bags of coffee go bad and it was a bad decision, right? So having the ability to look back, like see all the trends, whether on the dashboard or in your financial reports, all that stuff is going to help you make way better decisions. Honestly, like it really pulled me out of years of like, I could have like money in my bank account that, and like, just think like, okay, there's money, I can spend money like I was spending it, but if I just lost a job, I lost all my cash flow. So like, I was just bleeding money, right? So like this cash flow thing is super helpful. It's going to show you like, all right, the money that you actually have coming in, you always want to have more money coming in than you have going out. It doesn't always work that way. Like sometimes you do end up spending more money than came in, but like, in that case, you're reporting a loss, right? Like, again, like this is like, we were talking about, profit and loss, and you can see it even more here. And like really, you see these are the exact same chart, just displayed differently. But the really useful trend that you see here is if this gray bar gets above the blue bar, you have a serious problem because that means that you're bleeding money. Like this is really healthy. Like this is like almost unrealistic, right? But I mean, it could be realistic. If you have a great business going, like that you can do this. But basically, your income is way higher than your expenses. So like, all this money here is like being added to your assets. This is being added to your equity. This is being added to your assets. So, like all that extra money on top there is really good versus if these expenses were like way up there, now like your actual total amount of money, right? Like, if we go to transactions here and we look at all accounts, like if those trends will reflect this big number here, right? So this is like your main number. So like, if like, check this out, like if we just go in and spend, you know, $400 on, I don't even know like what bad decision you can make with this. Yeah, like on like a medical bill, right? Medical bill. Um, and you just spend all of that from cash on hand, uncategorized expenses, doctor, dentist, etc. Like, that's like, a really unfortunate situation. And like it'd be easy to just kind of go on living life like with that $189 that you have there. But like when you look at this and you see that like, okay, like you're really on the edge of actually losing money right now that month, then you're going to want to tighten up your spending. But like, if you have that big buffer, you have a bit more freedom. Um, Now let's assume that you didn't just have like a really awful medical bill that just ate up a bunch of your wealth, and so we can delete that. Um, that's ideally not going to happen. You can also like defer that kind of stuff too. Like, you might get like some angry phone calls or whatever, but you can take your time with that stuff to a certain degree. What I would do in this situation, right? Like if this was my financial situation, this is really kind of the last thing I'm going to say here. So I have $481.23 in cash on hand here. what I would do here is create a journal transaction. And I really should have shown this earlier in the video, but I kind of got distracted by the other cool features here. I'm gonna take like $300 of this, right? Like presuming like that's reasonable, and I know I can live off the other $180. I'm going to budget cash to um, let's put it in like the Chime savings, right? Budget cash to Chime savings, and they give you like APY on that. It's not bad. Um, so debits. So sometimes I get this backwards. I'm not 100% sure if I'm doing this right, but we'll see. So $100 or yeah, $300. Let's say 250, right? Like give yourself a little buffer, but basically the goal is to never touch this money, right? Like let this money accumulate. If you do anything with this, it's going to be to invest it and like leverage it, right? But you want to be really careful. This is basically money that you're not using for casual expenses to live off to pay bills. Like this is money that you are setting aside. Um, and that's really how you build wealth is like through saving and investing and leveraging what you do have to create more. So now you can see like we have the same amount of money total, like the all accounts didn't change with the journal transaction. Like see if I put like 249 here, it would like give me an error. See like it turns red, like that's not like a real journal transaction, it's not accurate. So these have to be balanced. If you're like taking money from one account and adding it to another, you do that. Now you might say like, but like I had a 1% fee, so you actually create it and add an expense, and like the 1% fee would be a bank and service fee, bank and credit card fees, right? You would choose that if that were the case. But yeah, so like the total number didn't change, but now we have 250 in Chime savings and still 231 on hand. Like you can really move a lot of money into savings, and like it's worth it, and you don't have to like live below your means. Really, I think the better option is to expand your means, right? So um, basically, yeah, that's accounting in a nutshell. That's Wave Accounting. We dove pretty deep. This is a pretty long video here, but I wanted to really show you like one of the most powerful tools that changed my business, changed my life, and I know that this is something that can really make a huge difference for you. So thanks for watching, and keep on accounting.